Discuss with your engagement team potential business risks facing SK Group Limited. Discuss the information that would be used to identify the risks of material misstatements in the group financial statements due to fraud. And part B of the question, advise the audit team on the matters to consider in gaining an understanding of the consolidation process of SK Group Limited. Recommend the audit procedures to be performed in respect of the loan advanced by Timothy SK Properties Limited. Then procedures to be performed on the going concern status of SK Television Limited, in addition to the review of the cash flow forecast. So that is the question. It's part of it has group questions and then some questions which might not be like entirely group questions. So when you talk about business risks that are affecting this company, which business risks are you seeing in this question?
Which year is this?
This one I'm not very sure of the year.
I think I've looked at it, but I don't remember the year too.
It could be the material that I shared with you guys, because it was part of the material I think that we had, that we were using. Should be part of the. Should be part of.
Open it and look at it on my end also.
Yeah. If you're looking at the class notes, then you go to the topic after group audits there.
The topic after group audits, eh?
Yes, it's after group audits. That's the question. That's it.
It's here. It's in that topic of group audits.
Yeah.
The business risks, eh?
Yes. So first of all, we have seen like all the issues that these guys have been having, the UCC switching them off. Then we have seen them having cash flow issues. Then we have seen them launching new products on the market, and they're expanding the business. And there's new regulations, like information technology is changing. All those things are risks that can actually affect what? That can actually affect the business. So if we are to begin in a chronological order, or maybe like trying to follow the case study which has been presented to us, one, we see that there is expansion happening, okay? And once expansion is happening, most of the times it's that the expansion might be overstated, or there's a risk that many controls could actually be broken as the business is expanding, and that exposes the business to operational risks. That is risk number one. When you say business which is growing, when you say business which is like over expanding very fast, then there's a risk from an operational perspective. There's a likelihood of breakdown in the internal controls, and also the expansion not being well planned and not being well estimated, which might lead to maybe over expanding, and that is disastrous for the business. I always like giving an example of one of the companies that was dealing in solar, I think, called M Copper. When M Copper was starting, they got the money, they were expanding, opening up service centers everywhere. But as we speak today, it's even very hard to trace a service center for M-Copper. So that is a typical example that, yes, they were growing, they were thinking they were scaling up, but the expansion was not being well thought about, and it was just being what? Overstated. That is one of the risks that we are seeing in this part, in this organization. The other risk that I'm seeing is compliance with new accounting standards. When you introduce new accounting standards, I think we covered this briefly under risk assessment and planning. When we are introducing new accounting standards, there's a chance or there's a possibility of them being misinterpreted, which will lead to misstatement of the what? Of the financial statements. So it's very important that if you are coming in as the external auditor, then you look at this very keenly and make sure that people are not misinterpreting the accounting. Then we have the regulations from the Uganda Communications Commission. There's a high risk of non-compliance due to changes and production of regulations from the Uganda Communications Commission. Remember, from a legal perspective, from a compliance perspective, the more the regulatory requirements, then the more the chances of not complying increase. Yes. Then we also have IT risk. We saw in the case study they were telling us that they were trying to introduce a new accounting software that has been acquired that was costing 90 million. So the company is trying to basically transition from analog to digital, and that is going to come up with many other IT related issues and challenges as the company is trying to adapt to the new way of doing things. Then of course there's changes in industrial regulations and requirements. We saw earlier at the start when they were telling us that the EU has brought new regulations, and these are going to affect the business in such a way that, one, it's very hard to comply with the EU requirements, and then two, there's a possibility or there's a high likelihood of them losing on the market if they are not able to comply with all the requirements of the what? Of the EU regulations. All together. Yes. And then finance risk. We already see that they do not have enough money. They're trying to get borrowing. They've got a 900 million from one of the shareholders. They've got 1.85, I think, from some other person. I think that was PTA Bank. Is it PTA Bank or someone else? No, from African Development Bank. So from a financing perspective, one, it's that the company is going to incur high cost of borrowing, which is definitely going to affect the profitability of the company. Then also, the company may not be able to meet its short-term obligations as and when they fall because of a lot of debt financing and not having a good cash flow position as a business. Those are some of the risks that are facing the organization that we are looking at. I don't know if there's anything that I have missed. There's something to do with branding and introduction of new products. I know there's a risk there. I'm not very sure how to bring it out properly, but I'm sure there has to be a risk to do with that kind of branding. So they are saying that they are changing the packaging, and they are making it like look better. Some people might not be interested in really the design of the packaging. What they're interested in is the water. So there's a risk of, I think, misuse of funds. If they are spending on an expensive package, it might not necessarily add value to the what? To the business. And that is not good for the what? That's not good for the business. So the changes in the product design and packaging is a risk that the business might not be making good use of the organization. Yeah. I think the next question was information that would be used to identify the risk of material misstatements in these financial statements. What kind of information would you use to do the risk assessment at this group level? You want to do assessment of this?
Due to fraud.
Yes, due to fraud, yes, yes.
All these points are supposed to come from the case, right?
No, this will not come from the case study probably. These are not laid out in the case study. What kind of information would you use? These are going to come from outside the case study.
Would you use to identify risks of due to fraud?
Yes.
For instance, I'm just like if the company acquired a loan, you look for board minutes, confirm if that loan was approved and all that, and if it's intended for the company.
Yeah, that's one way. So reading the minutes of the board, and we had already.
Is it correct?
Yeah, that is correct. Using the minutes of the board is one way you can use. You can look at is some of the information you can look at. Do what to assess the risk due to fraud? Because if there has been fraud, then it's going to be talked about at board level, and that is why we say that it's very important to assess the risk of fraud for you to look at the minutes. One of the things we said is that management is responsible for fraud, and they're supposed to make sure that they do that fraud risk assessment and come up with mitigations. So you would want to review or management documentation about fraud in the organization. That is one of the things you use. Okay, understand what has management done, what has management documented about financial statements being materially misstated, whether due to fraud or error. So that is So that is one of the things you would look at. Management's process for addressing these risks. They have done their fraud risk assessment and documented, okay? But what is their responses to these fraud risks? It is also very helpful. You're going to be able to identify what are some of the aspects that might not be well covered, that might not be well mitigated, and then that is where fraud could be coming from, or that's where fraud could be being perpetuated into the business, and you need to actually check and see that it's not happening. Then of course, how does management monitor the processes of the group of the business? It could be internal audit, for example. If there's fraud in the organization, maybe internal audit could have talked about it or discussed about it. So you're looking at the reports of internal audit, then you're going to be able to determine if there has been fraud or suspected fraud or actual happened in the organization. So those are some of the that is some of the information you would use to check or assess if the financial statements are materially misstated, whether due to fraud or error. And the next question is advising the audit team on the matters to consider when they are gaining understanding of the consolidation process. What are some of the things they need to focus on when they're understanding the what? The consolidation.
Group structure.
Yeah, that is one. Group structure. It's very important that when you're dealing with a group, you understand the group structure, and then you're going to be able to know what shareholdings you actually have at the different levels of the what? Company, at the different levels of the organization, and those are the ones that are going to be affecting what you're consolidating, what you're not consolidating, and many more other details. Then the other thing that, of course, you need to consider under consolidation is whether management has a proper understanding of the IFRS, and if there's a likelihood of errors arising in the what? In the group financial statements. Who is going to be doing the consolidation in the group? Do they have experience in consolidation? Do they know how it is supposed to be done? And are they knowledgeable? Like, are they skilled? And will they be able to produce financial statements that are complying with IFRS for external reporting? And then you also need to understand the process for identifying and eliminating intercompany transactions, intercompany balances, and any unrealized profits on closing. So that is very, very key, because remember, one of the things that we do when we are consolidating is to knock off all intercompany balances, receivable versus payable in either entity. That is one. And then two, we identify them and eliminate them. Likewise, we do the same for the company sales and what? And purchases. So even that has to eliminated from the financial statement. That's one of the things you need to understand. How do they basically make sure that they get this properly identified and properly eliminated from the financial statement? I like giving an example of some of the group audits that I have worked on, and this is how they would do it. They are going to say that all the group companies, you have to get a confirmation of the balance at the end of the what? At the end of the year. And when you get those confirmations of the balances, you're going to have to, like at the end of the period, you make sure that every rated party confirms their balance. That control is to help them to be able to identify those that could be having balances which are not what? Which are not matching. It's different if we just say what are the balances in our books, due to this, due to this, due to this, and then we do the math. But it's different from if we say that, okay, let every entity confirm their balances with each other entity. And then you put them on the matrix after reconciling them, because all the companies have to confirm. And then you do the math and the addition and subtraction to make sure that those intercompany sales, those intercompany purchases have been properly treated in this financial statements.
Yep.
Then, of course, you also have to check for the accounting policies being used for the group, if they are consistent with the previous year, if they're in line with the group accounting requirements, and if if there are new changes that are arising that could affect the what? The financial statement of the what? Of the group that are being prepared. And then, of course, the procedures that management has in place to deal with companies that could be having what? Different year ends. This is very key when you're dealing with a group auditor. If you have any company that has a different year end date, then you might have to identify a special way of treating it in these financial statements. I think that's it when we're dealing with understanding the group. You can take a further look on those procedures or the things that we consider when understanding a group, but I think that's pretty much. Audit procedures that we would carry out when we are auditing the loan advance from Timothy to SK Properties. What audit procedures would we carry out? This group of 10 marks, we want 5 procedures, each procedure taking 2 marks. What procedures do you think you would carry out? Remember the tip that I gave you way back when we were studying. We said that there are those procedures which are like mandatory, which are applicable on each and every area, regardless of what that area is. Don't forget.
Yeah.
Yeah. So what procedures would you carry out? You're auditing this loan in advance from Timothy to one of the group companies.
Cut off. Confirm opening. Hello?
Yes, Jen, I can hear you.
You confirm like actually I've remembered another point. You confirm the rate at which Timothy gave this loan, advance this loan to the company. Confirm if it's the same rate, market rate that.
You mean exchange rate, interest rate? Which rate are you talking about?
Like,
Are you talking about
the interest rate?
Interest rate.
Interest rate.
Okay.
Yeah, because they might give the company a loan at a high interest rate for his own personal benefits.
Okay, so in this case, what is the procedure? What would you do? You read the loan agreement and confirm that the loan advance to the business matches the loan in the financial statement, and that the interest rate being used to calculate interest matches with the interest rate stipulated in the what? In the agreement. Is that right? What other procedure have you remembered? Remember, I gave you those procedures which are constant. Please, you have to remember those ones.
Opening and closing balance. Board.
You
Board
talked about it.
Sorry?
You talked about it. Just finish the sentence.
Okay, board minutes.
Read board minutes to check for approval for the company to get that loan. How would you confirm that this loan is actually there? We want to confirm existence of the debt. How would we do it?
Confirm that the loan is actually there.
Yes, how would we do? What procedure would we carry out?
Bank statement.
We check on the bank statement to confirm that money was received by Properties Limited. Another procedure still to confirm. Another procedure. You forgot.
Recalculate.
Yeah, you can recalculate the interest and also recalculate the classification of current and non-current liability. Then we need
to you can confirm.
Yeah, obtain direct confirmation from Timothy about the loan outstanding from SK Properties Limited. I think that's it, but we've forgotten the one for translation. Check that the loan, I think this was SK's loan in dollars or it was in shillings?
It was in dollars, 900 over.
No, it was 900 million. 900. But I think it was in shillings. If it was in dollars, then we would need to add a procedure for confirming that the loan has been translated into shillings at the closing rate at the end of the end of the year.
It was in
shillings. How much came? Jen, are you there? Hey, I think I had lost you a little bit. Jenny, can you hear me now? Hello? You're not able to hear me?
Yes.
Okay, I think I had lost you.
I don't know. I keep going on and off. I don't know why.
Yeah. Then the other procedure which I talked about, which we should not forget, is obtaining management representation letter with respect to borrowings. This one is applicable. If you're auditing receivables, it will be to receivables. If you're auditing payables, it will be to payables. If it's cash and back, it's going to be for cash and cash equivalents. So don't forget that one. Then the next question is on the going concern status of SK Limited, SK Television Limited, in addition to the review of the cash flow forecasts. What other procedures would you carry out to validate going concern of the business? Do you have an idea on going concern audit procedures?
Going concern.
Yes, yes, yes. It's a very good topic, very brief, and audit finalization. And we only have, in that topic, we only have
Inquire with management if they have a plan
a plan to do what? Finish the statement.
to
Plan to do what?
to recoup that, like to bring back the business to life.
Don't complicate. The business is still alive. Don't kill other people's business, my dear, before it dies.
But its going concern is questionable.
Yeah, but the business is, it's questionable, but the business is still alive. So basically, you can inquire from management about their plan to deal with short-term obligations as and when they fall due. That is the liquidity part of it. And then, of course, we have a lot of debt. Read the terms of the loan agreement and confirm that none of these terms has been breached. Because you know when you breach these financing agreements, people are going to say, give us our money, because you no longer are not supposed to have our money. If, for example, you're not meeting the ratio requirements, then they're going to say that you should bring back their what? The money. And of course, also obtain from, you need to confirm with the shareholders the ability to continue obtaining financing from both the shareholders and other providers of finance. If people are not willing to add in money into the business, then it might be very difficult for such a business to actually survive the what? In its operations. Then, of course, we have reviewing with the legal counsel or checking with the legal, obtaining confirmation from the legal counsel about any pending litigation or cases or any other legal matters. This is because we know that those litigations that are pending have very significant impact on the what? On the company. It's something which can come up and all of a sudden you're closed. Something might come up and all of a sudden you lose your customers. For example, if the regulation is tight in that you have to meet certain standards for it to be able to keep operating, then that can actually happen. Forget about Uganda, where it might not be very strict, but in other countries that might really happen, and you wouldn't want that to you as a business owner. Then, of course, still under going concern, obtain management's SK Television. These are the guys who are originated by UCC. Review regulatory compliance reports from Uganda Communications Commission and confirm if any of the legal requirements are being what? Bleached. This is very important because if you're not complying with your regulators' requirements, then anytime they can do what? They can choose to shut you because you're not living up to what the regulator actually wants you to do.
What of obtain management representation?
Obtain management representation with respect to the company's ability to continue as a going concern. We had talked about reviewing cash flow forecast. We already have it, so we don't need to repeat it. Let's also talk about reviewing management plan to deal with any outstanding customer orders, because that is very, very important, especially in the service sector where you are doing delivery. Are we together? Yeah, I think that's it. There could be more procedures, but yeah, you can read it. Like this should be very straightforward when you look at the material we have in our reader. Let's take a break of 10 minutes and then we'll be right back. 10 minutes break and then we return.
Okay.